$1.3 trillion in a single quarter. The drought is officially over. Bankers are buying boats again.
Or they're just panic buying $15.7 billion in cash for the McCormick and Unilever carve-out? That is steep.
It's a $20 billion flavor empire, Maya. It makes strategic sense. Plus, Apollo might drop $10 billion on KKR's private jets.
Right, because nothing says rational market like buyout barons trading luxury aviation fleets. Let's look at the actual math on that Unilever payout. The rundown.
So Apollo's really going to write a $10 billion check to KKR for Atlantic Aviation. Just two buyout barons trading private jet fleets like baseball cards.
Private equity selling to private equity at a $10 billion valuation always makes my eye twitch. You just know the management presentation was 90% photos of tarmac.
Hey, rich people need places to park, but seriously, the PE rumor mill is overheating. Everyone wants to lock down these hard assets while Q1 momentum is still hot.
Speaking of hot, Biogen just dropped $5.6 billion in cold hard cash for Apellis Pharmaceuticals.
All cash, that is a flex.
They need that rare disease pipeline. Their immunology portfolio is looking a little thin, and Apellis plugs that hole instantly.
I like this strategic fit. But you know what integration is going to be an absolute nightmare? Playlist and EGYM officially closed their $7.5 billion fitness tech merger today.
Oh, come on. Why a nightmare? It is just software and connected weights.
Because merging two massive tech cultures never works smoothly. You have engineers from two different ecosystems trying to build one unified platform. It is going to be a bloodbath on the product side.
I actually disagree. Fitness tech is highly modular. You just API the software together, but you are accidentally touching on that new RGP report.
The human value gap one?
Exactly. 81% of CFOs claim culture is critical for M&A success, but only 18% actually protect their talent during integration.
Well, sure, CFOs love talking about culture until they need to find $50 million in synergy targets. Then culture gets outsourced.
Ouch. Too real, Nate.
Just calling it like I saw it for 10 years. Speaking of finding synergies, Carlyle just took a majority stake in MAI Capital Management.
Valuing it over $2.8 billion. Wealth management is just a pure roll-up play right now.
Exactly. Buy the assets, trim the back office, print money. Quick beauty hit before we move on. L'Oreal and Kering finalized their partnership. L'Oreal officially owns Kering Beauté and the House of Creed.
A historic luxury asset changing hands. I read the footnotes on that one. The earnouts are fascinating.
We will save the earnout math for the newsletter, because we need to talk about the real monster that just capped off this $1.3 trillion first quarter.
Oh, you mean McCormick writing a $15.7 billion check to eat Unilever's food business?
A $20 billion global flavor monopoly. The antitrust lawyers are already salivating. The big one, $1.3 trillion. That's the final tally for Q1 global deal volume. Bankers are exhausted, pitch decks are flying, and we're officially back in boom times.
I'm looking at the data, and honestly, it feels a little like panic buying. Everyone sees the debt markets soaring, and they're scrambling to secure assets at any cost. Which brings us to the grocery aisle, McCormick and Unilever.
This is exactly what I love about a hot market. The structures get creative. Unilever is spinning out its food business to McCormick. But look at the math. Unilever walks away with $15.7 billion in cash, plus a 55.1% stake in the new combined company.
A $20 billion global flavor juggernaut. But Nate, explain the banker logic to me. McCormick is supposedly the buyer here. Why are they giving up majority control?
Because it's a carve-out masterpiece for Unilever. They want to shed slow-growth food brands to focus on beauty. They get a massive cash payout for their shareholders, but they keep the majority upside in a pure-play food leader. It's brilliant.
Brilliant for Unilever, sure, but I think McCormick is getting totally played here. You don't hand over $15.7 billion in cash just to become a minority shareholder in your own core business.
Oh, come on. They get unprecedented scale. You combine McCormick spices with Unilever's massive footprint. You basically own the global kitchen cabinet.
You own the cabinet, but Unilever owns the house. 55% means Unilever dictates the board, the strategy, the capital allocation. McCormick just paid a massive premium to sit in the passenger seat of a car they used to drive.
I see your point. The control premium basically went in reverse, but McCormick clearly felt the heat. If they didn't grab these assets now, someone else would.
I just don't buy the integration story. I was reading that RGP research report this morning on the human value gap in M&A. 81% of CFOs say culture is critical to a deal's success. Guess how many actually protect those assets during integration?
Knowing my former colleagues in banking, maybe 10%, we just modeled the synergies and ignored the people.
Close. 18%. Now imagine McCormick trying to integrate thousands of Unilever employees across dozens of countries, while Unilever still holds the voting majority. The culture clash is going to be a bloodbath.
And that's before the government steps in. You can't just staple the two biggest flavor and condiment makers together and expect regulators to ignore it.
Exactly. We're going to be tracking the antitrust chatter on this one closely, because a combined $20 billion market share is going to set off alarms in Washington and Brussels.
We'll see if they actually get to close. But speaking of massive price tags, private equity is definitely not sitting out this Q1 frenzy. I hear Apollo is suddenly very interested in private jets.
The rumor mill is completely out of control. Apollo is circling KKR's Atlantic Aviation, and we have a potential $10 billion dogfight between two buyout heavyweights coming right up. Voices. I'm looking at this new RGP research report, and the disconnect is just hilarious. 81% of CFOs claim culture and talent are critical to M&A success.
Let me guess, 0% actually do anything about it.
Close. 18% believe they effectively protect those assets during integration. They are calling it the human value gap.
Look, I was in those pitch meetings. When you are staring down a record-breaking $1.3 trillion first quarter, human capital is just a cell on a spreadsheet. Buyers are scrambling for assets at any cost right now.
But that is exactly my point. The bankers are already whispering about the AI and tech sectors overheating. Buyers are paying massive premiums to acquire talent, and then they just crush the target's culture on day one. It is terrible capital allocation.
I disagree, at least on the macro level. You are reading too much into the tech narrative. Look at the private equity rumor mill. Apollo is reportedly circling KKR's Atlantic Aviation for $10 billion.
Right, private jet terminals.
Exactly. Two buyout barons trading a massive infrastructure asset. Apollo does not care about the corporate culture of the tarmac crew. Analysts are saying PE firms just want to accelerate platform scaling away from public market scrutiny. The human gap does not matter there.
Okay, fair. Hard assets are a different game, but you cannot tell me Carlyle valuing MAI Capital Management at over $2.8 billion ignores human capital. That is a wealth management firm. The actual assets go down the elevator every night.
That is actually a great point. If you blow up the culture there, the advisors walk, and you just bought an empty building.
Exactly, which brings us to the ultimate culture and integration clash. Tomorrow, we need to look at the regulators.
Oh, you mean the McCormick and Unilever combination?
A $20 billion global flavor giant. I'm already seeing early antitrust chatter. We will dig into whether regulators let them spice things up, or if the government decides they control way too much of the grocery aisle. Spill the tea.
I just love the visual of Apollo and KKR fighting over private jet parking lots. $10 billion for Atlantic Aviation.
It is the most private equity story ever told. KKR bought it recently, and now Apollo wants to write a $10 billion check just to valet their own Gulfstreams.
Hey, infrastructure is infrastructure, and honestly, with global deal volume hitting $1.3 trillion in Q1, these firms have to deploy capital somewhere. The AI multiples are getting absolutely absurd. My old banker buddies are literally whispering about an overheating market.
Whispering? They are shouting. But this is exactly what happens when buyers scramble to secure assets at any cost. You get massive check sizes and zero plan for the actual humans involved.
Oh, come on. Apollo knows exactly what they are doing with Atlantic. It is a hard asset play. You do not need a deep cultural integration plan for an airplane hangar.
I am not just talking about the hangars, Nate. Look at the new RGP research report. 81% of CFOs claim culture and talent are critical to M&A success. Do you know how many actually protect those assets during integration? 18%.
Wait, really? Only 18?
18%. The rest are just making up synergies in a spreadsheet while the top talent walks out the door. It is financial engineering disguised as strategy.
Typical banker move. I feel personally attacked. But you are right. When you move 1.3 trillion in 3 months, human capital becomes a rounding error.
Which brings us to the ultimate test of integration. We need to talk about the spice aisle.
Yes, the McCormick and Unilever food merger, 15.7 billion in cash changing hands.
Tomorrow, we are going to look at the early antitrust chatter on that one, because a $20 billion flavor monopoly is definitely going to make regulators sneeze. Saru Asapsh. Tomorrow's radar. Nequid. I am refreshing the FTC site tomorrow morning. A $20 billion spice and flavor monopoly? The antitrust lawyers are already drafting their complaints against McCormick.
You are way too pessimistic. It is a carve-out. Unilever just wants the 15.7 billion in cash. Regulators will let it slide with a few divestitures.
Let it slide. Have you met this FTC? They will argue McCormick is cornering the global market on garlic powder.
Okay, fair, but my eyes are on the private equity rumor mill tomorrow. Apollo is supposedly circling KKR's Atlantic Aviation for 10 billion.
10 billion for private jets. Because the one thing buyout barons need right now is more places to park their Gulf Streams.
Hey, Q1 deal volume just hit 1.3 trillion. The money has to go somewhere.
Yeah, mostly into deals that ignore the actual humans involved. That new RGP report shows only 18% of CFOs protect talent during integration. They just mash spreadsheets together and hope for the best.
Spoken like a true journalist. But spreadsheets pay the bills. We will see whose math holds up tomorrow.